Gordon, thank you for coming to my FBK interview. We know that you have been living in China for nearly 20 years, and these are the years when China has witnessed significant social changes and economic reforms. If we put this picture into the background for our discussion, what ideas may come to your mind on what digital business or digitization means for Chinese local enterprises?
Well, I think there's some tremendous opportunities for Chinese local enterprise because of digital and because of the way, if you create your business online from the beginning, you can become nationwide. You can even become international because there's all of these enabling systems, the payment systems, the logistics systems to support you doing that. But the real challenge is not about going nationwide because all of that support's there. The challenge is about creating a business that you can run professionally once you get a little bit larger and having the skills and the organization processes and systems to do that. And many companies can start very fast. Very few of them so far are sustaining that scale.
Which industry will benefit the most and which least in this digital movement?
I mean, that's a tricky question because, often it's actually not. What's going to happen to the industry is enormous change and volatility, and there'll be winners and losers in the industry. So you could take banking, for example, and banking is going to change tremendously. We've already started to see some of that, but the incumbent banks that have all of their real estate and their tens of thousands of branches, they're going to have challenges because they've got that fixed cost structure. They have to create a digital bank to compete against the new online banks that are coming along, but they have all of the old cost structure as well. So there'll be some winners and some losers, but most importantly and most excitingly, lots of volatility, lots of change. The retailing is the same. Some retailers will adapt. They'll continue to be strong physical stores, and but they'll add a strong online presence. And then some retailers will just be online. And so I think it's hard to say. Maybe there's one or two industries. I mean, if you're a travel agent selling airline tickets, that's not a good business. If you're a real estate company building shopping malls, and maybe we'll talk a little bit more about that later, you're going to have to certainly change your business model because it's not good. It won't be as easy to attract people in before.
Is digitization a good way, a new way to expand business globally?
Absolutely. It enables. I mean, the technology allows you to connect to people globally, and that's the most important thing. So it's an enabler to allow you to do that.
It's the starting point.
It's the starting point. But if you don't understand the consumer in the United States, it doesn't matter that you can connect to him because he's not going to buy your product. And if you don't understand the regulations in those, because like China has its own regulations that multinationals have to understand. Chinese companies have to understand the regulation in Germany or Canada or Brazil to sell there. So that is important.
Regarding these global connections, what specific detail would you share with the Chinese local enterprises about how they should sharpen their global edges digitally?
Well, I think what I would be counseling them to do is don't focus entirely on digital. So have a online and offline presence so that if you want to sell, let's take Brazil. Lots of Chinese companies sell in Brazil. You need to have Brazilian people in an organization working for you in Brazil alongside your online presence. Because people want this, on almost anything you sell that's going to have real value, there's a service component to it. The customer wants to talk to someone, they want to talk to them in their own language, someone who can explain to them about the product, or if it breaks, how to get it fixed.
In your annual predictions for China 2014, there are two phrases which are important. You said one is the productivity growth and the other is technological disruption. And what's the thought behind this?
Well, we touched a little bit on technology disruption, and you see what digitization is doing is in terms of enabling companies to reduce their costs. It's enabling them, as I said, to connect to a different set of customers, and it's also enabling them to change their business model. But there's something particular about productivity that mixes these two things together in China. Because in China, for the last few years, the costs of very many things have been rising very rapidly. The cost of workers in the factory, the cost of energy, water, land, the cost of borrowing capital from the banks, all of that's gone up. And you've seen across many industries profitability declining. So the way to address that is through improved productivity. And so in the past, when Chinese companies had a problem, they would say, okay, we've hired 10 more people to fix the problem. Now they don't. They say, what's the smart way to do this? And this is where technology comes in. Say, should we be using technology?
But what do you mean by disruptive technology?
Okay, disruptive technology in that it dramatically changes the way the business model for the industry. So non-disruptive technology would be putting robots in the factory. Okay. So that's taking a technology that's there, substituting robots for people. But you're building the car the same way. The car still comes down the production line. It's a robot, not a person. Disruptive technology is an insurance company that has 1 million sales agents today. 2 years from now, may sell 80% of its insurance online.
80%.
Could be
Okay.
Could be as high as that. If you look at some other countries around the world.
So it comes back to online again, right?
Yeah, I mean, if we're talking about the consumer side of it, I mean, it's often internet enabled, absolutely. There's if you want, I mean, there's disruptive technology coming in other areas as well. I mean, what is happening through genetic research in China is about to fundamentally change the way we think about diseases and sickness and the way we prevent, whether we modify our genes to prevent ourselves from getting sick. Now, that's a few more years down the road, but we can see that coming. And we talk about it in China because we know China's a leader in developing these capabilities.
You mentioned the online insurance and online banking, and now we can see private startups only advantage of the digital-only business model is rising on the horizon. Would you believe that more Chinese would do their online banking in China in soon future?
Well, first of all, you understand the Chinese consumer. Chinese consumers love doing things online. Very enthusiastic adopters of online compared to other countries. Okay, that's fact. So will people be doing their banking online, whether it's banking through one of these new private banks or it's ICBC or Chinese merchants? In many cases, yes, absolutely they will. It's not easy to be an online, just to start up and be an online bank. What we've seen is it's incredibly easy to gather deposits. I bet you've got some money in one of these internet wealth management products. Yes, I mean, but everyone does. It's 80 million people do. It's very easy to. That's what the internet does. It makes it very easy to gather the deposits. Yeah. But now they've got all this money, they have to find somewhere that's safe to lend that money to, and to have what in banking you call the risk management processes. To have those processes in place so that you don't lend money to companies that are going to go bankrupt or companies that are going to not be able to pay it back or run away with the money. That's really, really hard.
Can you give us specific figure of a percentage of how much it will going to grow in China in terms of online banking? Or a number of Chinese?
That's not really up to me. That's up to the Chinese regulators.
Okay.
And how much they choose to encourage this and how much they choose to restrict it. Because the point I just made about risk management is incredibly important. Because with traditional banks, the regulator says you have to hold to the bank. You have to hold a certain amount of capital against bad debts. These internet banks today are not holding any capital against these debts. And so that has to change.
So it's really a challenge to the regulators.
The hardest job in China today is probably regulating the financial system. Yes.
Yeah,
yes.
Okay.
Yeah.
And shopping malls are now losing ground to the online marketplace as retail sales jumped by 50%
Yes.
in 2013, as you mentioned in your predictions. I want to know your thought and your predictions behind this.
Yeah, no, this is a really this is a really important challenge. And, of course there will continue to be malls, but they're going to be different in the future in multiple ways. And my prediction that many malls would run into financial difficulties is clearly happening. I mean, some of my colleagues were in Shenyang earlier this week.
You meant state-owned companies.
I mentioned state-owned in particular, but also some private ones as well. The malls get into difficulties if they're in bad locations, and many of them are. I've even seen malls in Beijing now that are shutting down. So it's happening. What's going to need to change? Traditionally, when you open a mall, you focused on attracting retail stores,
Sure.
clothing, electronics, like that. And there will still be some of those in the future. Maybe more grocery type stores and the like. But there's going to be many, many more service businesses. There'll be the doctor, there'll be the optician, the hairdresser, the tutorial, the education services, the cinema, and of course the restaurants. Yeah. But there's a limit to how many restaurants you can have.
You cannot do it online, right?
Things that you can, so it becomes a destination and a services center rather than purely a retail center. And that's going to be, for the mall owner, in most cases, generate less revenue for them. So they're going to have to adjust their business model.
In your prediction, you said CIO.
Yes.
It's a very significant commodity.
Yes.
So then who is CIO?
That's a good question, because historically, particularly in Chinese state-owned enterprises, the CIO, the Chief Information Officer, is deep down in the organization. Yeah. It's not a very popular, not a very respected position.
Not on any strategic role, right?
No strategic role. And so the person who was recruited into that role didn't have strategic skills. Yeah. And that's part of the problem now. Because the CEO says, hey, we need a digital strategy. Yeah. What's happening? Yeah. I guess I should talk to the CIO. And they talk to the CIO, and it's like they're talking two completely different languages. Yeah. And they don't. Huge gap in, the CIO can put the wiring together, can buy your PCs and the like, but can they think strategically, communicate with you about what my new business model is? Yeah. Very few can. And this is why I think this is one of the most important roles in China today, that, there's an enormous opportunity for people who can talk technology and talk business together to become, really invaluable advisors to the CEO.
And what's your advice for these enterprises to improve the importance of the CIO? What can they do?
Well, first of all, you've got to have the CIO, or you may change the title, call it Chief Digital Officer, whatever, but you need this person to report to the CEO. Not report 3 levels down.
Okay. Then sit behind,
they have to be at the table at the management board meeting. You have to allow them to hire new talent. Okay. Talent that's been working in the digital world, not talent. It's more important to have the digital experience than it is to have your industry experience in financial services or retail. You have to understand what the changes could be.
In your prediction, you mentioned a lot about the digital enterprises.
Yes.
And also said something about the control of job losses, because with the emergence of digital enterprise, there might be a problem of job losses. So I want your suggestion that how can we strike a balance between these two?
This is a really tricky one for the government, again, because, in many industry sectors in China today, market forces are what's driving behavior. Yeah. So let's take the insurance industry. Yeah. You've got state-owned companies, you've got private companies, you've got startups, you've got big giants. they all have the technology. They all have access to this technology. So people are going to use it, right? So people are going to offer insurance products online. And if it's cheaper, maybe the customers will buy it. So those companies don't need as many sales agents. That's going to happen. Very little the government can do at this point to stop that happening. Maybe in some industries the government can play a role in slowing. But what the government needs to do is to recognize this is what technology is making happen, and to intervene, I think, at two levels. One is in helping people who are coming into the job market have the right kind of skills for the new jobs that are coming, and also encourage industries to organize to retrain people. So the insurance industry has a responsibility. It can't just sell this hundreds of thousands of people.
Tell its agents how to sell insurance online.
Or maybe to go beyond the insurance industry, to teach them some sort of skill. And in fact, next weekend in Beijing is the China Development Forum, the big get-together where Chinese leaders meet with global CEOs. And I was actually asked to write a paper for that session on exactly this question of technology is an inevitable force. These industries are going to restructure. What does business have to do, and what does government have to do, and how do they collaborate with each other?
Yeah. And my last question, is McKinsey a digital enterprise?
We have to be a digital enterprise. I mean, the consulting is being affected as much as many other service industries are. And so we're digital in multiple ways. We're digital in how we operate internally. We're digital in the kind of things that we give to our clients. 10 years ago, if a client had a problem with pricing, we'd sit down and we'd get a spreadsheet and do lots of calculations. Today we have a piece of software that the client will license that software from us, and we'll work with them to use the software. So we have a digital part of McKinsey. And then, of course, we're advising clients on this question, the things that we've just been talking about. So at three levels, I think we're digital.
Not only internally, but externally to
exactly.
Customer solutions.
Exactly. You have to do both, because otherwise, not relevant.
To conclude our interview, my very last question. What is a digital enterprise?
A digital enterprise is a company it's an enterprise that understands the technologies that are relevant in terms of impacting the way it does business today and how it could reinvent how it does business tomorrow.
Very good. Thank you very much.
Thank you.